Well, listening to that is Sally Mitchell from Hertfordshire, mortgage advisor and broker at Mortgage Mum. Good morning to you, Sally.
Good morning.
Now, are you being contacted by people whose fixed rate mortgages are coming to an end then?
Oh, yes, lots and lots. And it's been happening ever since the mini budget last autumn. Unfortunately, these most recent rate hikes are just the last or the most recent in a long line of them. And let's just hope that we don't get any more.
What sort of price increases are we looking at? A couple of hundred?
Yeah, at least that. The average will be about $2,900 a year for the average mortgage. But obviously there are some people who live in perhaps more expensive areas who've got a bigger mortgage, so southeast classically, and they will be paying a lot more. I've seen some clients' mortgage payments go up by £500-600 a month.
Wow.
And
And we're hearing as well that some lenders are now pulling deals that they had offered people.
It's happened it's been happening for weeks. And in the last week, one big lender actually did it twice. They give no notice. Sometimes, literally, they'll say, get everything in by 8 o'clock tonight. And this is 3 o'clock in the afternoon. And sometimes they don't bring back any products for at least 2-3 days. It takes them a while to get their systems reloaded, repriced. It's an awful lot of work for them, but it's not very helpful if you're in the middle of trying to purchase a property.
I mean, what is the answer here? Who needs to take control of this situation? And what can be done? Is it down to the government to help out, or is it down to the bankers, or obviously, the banks that are making a fair few quid? Let's be honest. Out of all of this, what's the answer here?
They are. I mean, the banks obviously are in the business of making money. They're not charities. We mustn't forget that. But they are just as affected by the cost of borrowing as we are. A slightly different way, but they have to borrow their money to lend to us. And that quite often affects, obviously, the cost to us because they have to pass it on. Experts are saying that the Bank of England have not handled this whole situation very well, that they let interest rates be low for far too long, which was inflationary. They're now trying to control inflation, and inflation at its current rate is really what's driving these increases. So although it's a bitter pill to swallow, economists say that we have got to keep going, trying to bring inflation down. Otherwise, there will be even bigger problems in the future. Of course, the Bank of England base rate on Thursday, the announcement, highly expected, anticipated to rise by at least 0.25%. And for people who are not on fixes, who are on variable rates or tracker rates, that will affect them as well. So the whole market is affected and continues to be so. I can't see an end to this. This year, I think we're going to be living with these high rates for quite a few months to come.
Sally, you say the banks are a business and they've got to make money. There will be some people that say, yeah, but we helped out the banks a few years ago. We bailed them out with our money. It's time to repay the debt, isn't it? Time to help us out.
Yeah, well, the big lenders do have departments dedicated to helping people who are getting into difficulty. And they really do not want to have to go down the route of perhaps repossession. So there is help there. They will swap you, if they can, onto an interest-only rate for short term. They will look at extending your mortgage term so that your monthly payments come down. And for people who are on benefits, there is a little-known government scheme. I don't know why it's not better known. It's called Support for Mortgage Interest, SMI. And if you qualify, and it's normally if you're in receipt of some sort of benefit, then you can get help from the government towards your interest payments, not your capital, but your interest payments. So that might be worth looking into on the government website as well for some people who will qualify.
Of course, most people are on a fixed rate mortgage.
Yeah.
And because if there are these increases, have only really affected people on variable rates so far, haven't they? So maybe there hasn't been a change in consumer spending yet.
No, they say, and I was reading this morning, because obviously this is just all over the press, especially our industry press, that it takes 9 months for any rate increase to actually filter down through into the sort of consumerdom. So we haven't really begun to see the full effect of these previous base rate increases and mortgage rate increases. I think we're going to be living with the effects, obviously, for a long time. And it's now that we're just seeing the beginning of the effect of the post-mini budget debacle. I'll call it debacle.
The fixed rate mortgage you can go for, the variable rate, the tracker, you know, or you could go interest only. Is that an option? Because one of the guests we were talking to earlier was saying, well, look, no, I could be going to an interest only mortgage. It's not what I want to do, but just in the short term. First of all, why are they so good? But also, are they even out there, interest-only mortgages now?
Yes, they are. There's not as many products to choose from, but they are a valid option and they are available. It's not for everybody because there is an increased risk attached to it. So they are pre-qualified slightly more strenuously than a capital repayment mortgage. It does bring your monthly payments down quite considerably because you're not paying off any of the capital. You're just paying the interest. The problem with them and the risk is that because you're not paying off any of the capital, at the end of your term, you still owe the entire amount that you borrowed. So if you took out a £200,000 mortgage, you would pay monthly the interest, and at the end of your 20 years, you still owe £200,000. So that's how it gets the monthly payment down. But the risk is obviously that, people will not be able to pay back that amount at the end, possibly have to downsize or in fact sell their property. And if they can't do that, then they'll default and the house would be repossessed. So it is a risky strategy, and really only for investors who have other properties. It's not their main residence. And only on a short-term basis as well. But it is a valid option for people who are struggling at the moment.
Okay, so advice now for the two groups of people that are already out there. Those that are their mortgages running out next month or by the end of the year, their mortgage is going to run out. What would be your advice to them?
Start looking at options now. Get in touch with a broker. You can start looking at products and swapping over 6 months before the end of your rate. So get in there quick. And if things improve, you can always change that rate, but at least you've locked into something before things potentially get worse. And don't put your head in the sand. Research, call a broker and look at the whole of market.
And what about those whose mortgages don't run out until next year, like mid next year, later?
Well, if they're lucky enough to still be on their, a good, what I call a COVID rate, then, just count your lucky stars and stick with it. If you can, I would start to overpay. Even if it's just £50 a month, the more you can decrease your debt, your loan, the better the situation you'll be in when it comes to remortgaging in a year's time. Keep an eye on the market. Get in touch with the broker now and just get on their radar that they're going to be phoning you in 6 months with all the latest deals and updates. But if you can overpay, even by a slight amount, you'll be in a better position when it does come to remortgage. And most lenders will let you overpay by up to 10% of the debt in any 1 year. And so if you can, do it. And
just before I let you go, Sally, it can be terrifying. It can be a sea of numbers to try and work out what to do. And it can, for most people, and I'm putting my hand up here, for most people, it can be quite overwhelming to go, I don't know what to do. I don't know what to do. Advice is out there, isn't there? There are people out there who can offer you, advice and guidance, with no catches.
Definitely.
And help you out.
And normally advice is absolutely free. I don't charge anything until it's time to actually put an application in. So there is help out there. Recommendation is obviously normally the best way. If someone's had a good experience with a broker, don't talk to Johnny down the pub, because Johnny down the pub doesn't have all the facts. And there is no shame in not knowing this sort of stuff. Yeah. We are all qualified. It's our job to help you and to know this stuff. Don't be ashamed.
Sally, really appreciate your time. Thank you so much.
My pleasure.
Cheers. Sally Mitchell there from Hertfordshire, a mortgage advisor and a broker at the Mortgage Mum.